Hello everyone, warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session where we are going to discuss the MCQs based on finance, and we know this very well that finance is going to play a really very important role in your upcoming examination, and keeping that in mind, we are trying our level best to help you guys so that you can prepare well for your upcoming phase 2 exam. So today I have questions based on a very important topic but yet ignored topic by most of the candidates, and that is related to security, related to charges, related to mode of charges, which means whenever we borrow loan from bank, we know this very well that our collateral has been given as a security against the loan, but in what format, in what mode this charge is being kept with the bank will be discussed in this particular session. So I will be discussing the MCQs based on the same area, and I'm pretty sure you are going to enjoy the discussion. So without any further delay, let's get started. I have a first question on the screen. The question talks about mortgage, but which mortgage? That is English mortgage. Which of the following statement is or are correct with reference to English mortgage? I'm pretty sure majority of the students out there who are going to watch this session, they may not be sure about the term what is English mortgage. English mortgage is a type of mortgage which allows borrower to borrow the funds by mortgaging obviously the fixed asset, but in case of English mortgage, the lender has the power to sell the immovable asset whenever required if the loan has been declared as default. So let's read out. In this type of mortgage, mortgager binds themselves to repay the loan to the mortgagee within a specific time till a specific date. So in case of mortgage, we have three parties involved. The first party is known as mortgager. Who is mortgager? So who is going to mortgage his asset, or I would say the borrower. And secondly is the mortgagee. Second is the mortgagee. And who is mortgagee if someone asks you? So mortgagee is the party which is responsible to provide loan. We can call it as what? We can call it as lender. We can call it as lender. Now, in this type of mortgage, mortgager binds themselves to repay the loan to the mortgagee within a specific time till a specific date. That is true. Second, mortgagee acquires right to the property from the mortgager during the loan period. So what does it means? Please read out this particular point quite closely and properly so that you can answer this particular point. It's a really very important point which you need to understand. What does it say? It says that mortgagee, that means lender, acquire rights to the property from the mortgager during the loan period. Do he has the right of the property? Yes, sir. He can sell the property if the loan has not been paid back, or I would say the loan has been declared as NPA, then the lender has a power to sell it. So that is also true. It is the least opted form of mortgage in Indian real estate. That is also true. In India, we do not follow, or it is very less followed type of mortgage. So answer to this particular question would be, so D option 1, 2 and 3 are correct. So D option is going to be the correct answer. So remember that in English mortgage, mortgager, as it is mentioned, the borrower binds themselves to repay the loan to the mortgagee, that is lender, within a specific time till a specific date as discussed. During the loan process, mortgagee acquires rights to the property from the mortgager, and the mortgager can claim his or her right property after paying back the loan. So once you have paid back the loan, then only you can call for your rights, or then only you can get back the rights on a property. Even during the loan period, mortgagee can allow the mortgager to occupy or rent out the property. This can be done as per the mutual discussion, as per the mutual, I would say, contract which has been signed. Moving on to the next question. Second question says, which of the following statement is or are correct with reference to one of the mode of charge that is known as lien? If I take a very simple example for you, let's suppose I have a fixed deposit with a bank and I want to borrow a loan against that fixed deposit. So a lien will be applied on my FD, and against that FD lending will be done by the bank. So lien basically allows a borrower to borrow the funds, but the amount on which the lien is applied, that cannot be withdrawn, that cannot be exercised by the borrower. In short, my FD is now locked until and unless I pay back the loan. I cannot withdraw that FD from the bank. But in case I'm not in a position to pay back the loan, then bank can easily recover its lending with the help of that fixed deposit which is kept as collateral. Even I can say that out of different modes of charges, lien is one of the safest form of charge, because generally lien is used in case of fixed deposit where returns are prefixed and predefined. So the probability of loss is prefixed, or I would say the amount of loss is prefixed, keeping in mind the principal as well as the interest rate which has been given by the bank. Now, it is a legal right against the asset that are typically used as collateral to satisfy a debt. This is absolutely correct. A lien is a claim, as well as I can say it is a legal right against the asset that are usually used to collateral to satisfy a particular debt. This is true. It is a valuable possession that is transferred to a lender to secure a debt or loan. You need to remember this. If I talk about the creditor, the creditor can seize the asset that is subject to the lien, as well as owner is not allowed to sell the asset or sell the property which is under the subject of lien without consent to the bank or without consent to the lender. So statement 1 is correct, as well as statement 3 is correct. But if I talk about statement second statement is incorrect, because it is, I would say it can be voluntarily, such as a lien on a property for a loan. However, involuntary or statutory lien exists whereby a creditor seeks legal action for non-payment, where they seek legal action against loan payment. Pledge asset is basically a format where we are pledging, we are giving the possession of our asset to the lender, but in case of lien, possession is not given, and obviously creditor will be following the norms in order to recover the loan in case of non-repayment. So answer to this particular question, 1 and 3 are correct, but unfortunately second statement is incorrect. So what I was trying to say, it can be voluntary, such as lien on a property for a loan. However, involuntary or statutory lien exists whereby a creditor seek legal action for non-payment. But in case of pledge, possession is basically transferred. Moving on to the third question. The question third is based on the answer of the second question, which says, which of the following is the collateral held by lender in return for the lending fund? So what is a type of mode of charge where practically the possession of the asset is given to the lender, where you are transferring the possession of the asset to the lender? That type of loan is known as what, or that type of mode of charge is known as pledging, and this means you have pledged your asset with the bank. For example, if I go for gold loan, in case of gold loan, I will be giving my gold in the possession of the bank. Bank will be keeping that gold safe until and unless I make the loan repayment. If I make the loan repayment and I complete the loan, then I will be getting back the gold. Otherwise bank will utilize that gold, sell it to recover its loan. So this is known as pledging. So pledged asset term is basically related to the collateral which is held by lender in return for lending funds. Got it? Moving on to the next question. The next question talks about stock can be categorized under which type of charge in economics. Stock you can take in two forms. One is shares of a company, and stock is the, I would say, goods which are ready for sale and they are in the warehouse of the company, which can be sold out whenever required. These are the goods, final goods which are ready, which can be sold out. Now, if I talk about stock, under which type of charge in economics we will be including stock? What will be your answer? Give me the answer in the comment section, that the stock of the company will be included. The stock of the company will be included under which category? What will be your answer? So will it be included under fixed asset? or it will be included as a floating charge or fixed charge, secured charge, conventional charge, or integrative charge? What will be your answer? Remember one thing, stock, if I take it in the manner of share, the price of share is changing on a regular basis. Secondly, if I take stock as a final good which is ready for sale, the price of the goods is also not fixed. It may change over the period of time. So in that particular case, I would say it is what type of charge? So it is a type of floating charge where the value of asset is not fixed. It changes over the period of time, and it can change over the period of time. We call it as what? So we call it as floating charge. Let's try to understand this point. Charge taken on variable assets of a corporation or limited liability partnership as security for indebtedness is known as floating charge. It is charge on property which is constantly changing, so stock. And if I differ it, then I can use a word inventory, then I can use a word trade debtors. These all are the examples of what? So these all are the examples of floating charge. So answer to this particular question is going to be what? That is floating charge. Moving to the fourth question. Which of the following statements are correct with respect to CARE, that is Credit Analysis and Research Limited? As we all know, Credit Analysis and Research Limited, what is it? What is it? Any idea, guys? Can you give me the answer in the comment section? Can you give me the answer in the comment section? What will be the answer? What is CARE? So CARE is basically credit rating agency. CARE is basically credit rating agency. What is credit rating agency? So credit rating agencies are the special organizations which are set up and they are regulated by SEBI, which are responsible for what? So they are responsible to rate the companies. Rating the companies means, for example, if an individual like me or banks such as SBI, I as an individual wants to invest in Infosys, bank wants to lend amount to Infosys, but we are not pretty sure that whether we should invest or lend our funds to Infosys or not, because we don't know what is going to happen on our returns. So credit rating agencies, they are responsible to check out or to review the credit history of the companies. They also review the current status of the companies. That means a number of ratios are reviewed: asset to debt ratio, then asset to equity ratio, profitability ratio, liquidity ratio, and on the basis of his credit history, current ratios, and the future perspectives of the company, ratings are given. These ratings, they are like your grading system which you follow in your schools and all. In that particular case, in a grading system, if you have received good rating, that means returns are going to be pretty high with low risk, or high rating means you should invest in order to get good returns in the near future. So CARE is one of the credit rating agency. It started its operation in 1993. Is it true? Yes, sir. That is absolutely true. It is supported by Canara Bank, UTI and IDBI. That is also true. Its headquarters in Mumbai. That is also true. So all of the above is the correct answer. All of the above is the correct answer. Got it, guys? Moving on to the next question. What does the next question talks about? Which of the following credit rating agency rates rupee denominated debt instruments provided by financial institutions? It's a very important question you need to remember. Till now, what I said, that credit rating agency is responsible for what? So credit rating agency rates the company. Not only this, credit rating agencies, they also rate the instruments. That means equity instruments or the debt instruments which are issued by different organizations in the market. Even credit rating agencies, they are capable to come up with sovereign ratings, which helps you to decide whether I should invest in that country or not. So now the question says, rupee denominated debt instruments. Rupee denominated means if a company is issuing a debt instrument which is in rupee denomination, should I invest in those debt instruments or not? These instruments are also rated by the rating agencies. But which of the following credit rating agency is responsible for the same? Sir, is it CRISIL? Is it CARE? Is it Samera? Is it Fitch? So answer is ICRA. ICRA, Investment Information and Crediting Agency, is responsible, or it is into the business where it rate or it provide rating for the rupee denominated debt instruments as well. This organization, that is ICRA, was set up back in 1991, and majority shareholding is with Moody's, which is one of the largest credit rating agency of the world, and it possesses its headquarter in Mumbai. Oh, sorry, it possesses its headquarter in US. I'm talking about Moody's. It possesses its headquarters in US, like S&P as well as Fitch. Moving on to the next question. What does the next question says? Which of the following statement is or are correct with reference to the Brickwork Rating India Private Limited? Brickwork Rating India Private Limited is again one of the rating agencies. Now let's check out the points. Sir, was it established in 1993? What will be your answer? Sir, this organization or this rating agency was not established in 1993. Rather, it was established in 2007. So Canara Bank is the promoter. That is true. Sir, it has also accredited by RBI, offers rating services on bank loans. That is true. NCD, true. Commercial papers, true. Fixed deposits, true. Securitized papers and security receipts. That is true. So answer is going to be 2 and 3. But this organization was not set up in 1993. Rather, it was set up back in 2007. So the answer to this particular question will be B option. 2 and 3 are correct. First is an incorrect statement. Moving on to next. Which of the following is the credit rating agency which works exclusively for micro, small and medium enterprises? It's a good question and majority of you can answer this, but remember that. Chalo, first give me the answer, then I will be discussing this. Sir, as the name suggests, small and medium enterprises rating agency, Samera, is responsible for providing ratings to the small and medium enterprises. Basically, it's a joint venture. It's a joint venture or enterprise by SEBI as well as DNB, that is Dun and Bradstreet Information Services, as well as in this we include some of the other banks of the country as well, which has helped in setting up of these organizations. Its headquarters is in Mumbai, and it is the first SME focused agency right now. It has been overtaken and it is operating under the rating agency of SEBI, and the name is Acute. Is it clear, everyone? Is it clear till this point? If it is clear, just give me yes sir. Do give me yes sir in the comment section. So next time if someone asks you about Samera, you should be in a position to answer all these questions. Samera was set up, and it was set up by which organizations? So basically Samera, if I talk about, it was established as the first rating agency focusing on small and medium enterprises. It was founded back in 2005. And its parent company is Acute Rating and Research Limited. Initially, it was the initiative of Ministry of Finance and Reserve Bank of India, but right now it is a subsidiary of Acute Rating, which is a joint initiative of SEBI and DNB. Is it clear, everyone? Clear? Shall I move to the next point? So next time if someone asks you, Samera was set up, it was set up by Finance Ministry, Government of India plus RBI. Later on it was overtaken, and right now it is a subsidiary of Acute, which is a joint venture of some SEBI as well as DNB. Moving on to the next point. The next question says, which of the following statement is or are correct with respect to the equitable mortgage? So again we have one more type of mortgage which says equitable mortgage. Now my question is, what is the meaning of equitable mortgage? Remember that mortgage term is basically used for immovable property. And as I read this particular question, what I found that deed of movable property, from here only I can reject the third statement that it is not applicable. It is not applicable on movable asset. Rather, the term mortgage is valid only in case of immovable asset. On that particular basis, third statement is incorrect. Now the question is, what about the other two statements? It is not common among the banks. No, sir. It is quite common among the banks. It is also known as mortgage by deposit of title deed. Yeah, that is true. That is true. So basically, when I borrow a loan from a bank, rather than transferring my ownership, or rather than practically transferring the ownership of my immovable asset, what I do is I get into a deed. I sign an agreement. In very simple terms, I sign an agreement where I say, if in near future I'll not be able to pay back the loan to the bank, then bank will automatically become the owner of this particular asset. I am depositing my registry papers, I am depositing my ownership papers to the bank, and these papers will be kept with the revenue department. And in the near future, once bank has declared my loan as NPA, then bank has a power to overtake this asset as owner of the asset, and then bank can even get into the format of auction where they can sell out my asset to the public in order to recover its funds. So the answer will be 1 is correct, second is not correct, because it is one of the most common, it is one of the most popular form of equitable mortgage, or one of the most popular form of mortgage type which is used in the Indian banks. So B option is going to be the incorrect statement. Moving on to the next question. Which of the following statement is or are correct with reference to ONICRA credit rating agency? So NICRA is again one of the crediting agencies of the country. Now the question is, so was it set up in 1993? Yes, sir, that is true. Is its headquarters in Gurugram? That is also true. It is public unlisted company and is classified as company limited by shares. That is true. That means it is a company, but it is not public. That means it is not listed on the stock exchanges, which means it has not issued its shares openly to the public. So answer is going to be D option. 1, 2, and 3 are the correct answers. Moving on to the next question. Which of the following statement is or are true with reference to legal mortgage? The method of creating a legal charge is expensive as it involves registration charges and stamp duty. That is true. Legal mortgage basically means you legally transfer the ownership. You legally transfer the ownership of your immovable asset on the name of the bank, where you say that if in near future I pay back the loan, then this transfer will be null and void, or it will not be valid. But in the initial stage, you are transferring it, which involve registration charges, it involves stamp duty charges. That's true. Legal mortgage is affected by delivery of documents of title to the property to the mortgagee. No, it's not delivery of papers. It is practically transferring. Legal mortgage is very expensive. Legal mortgage retain possession until payment of the mortgage money. It can, it cannot. So I will go with only one statement, that is A option, which is correct. A option, that is correct. So A option is the correct answer. D option is not 100% incorrect, but I have to choose one only. So I'll go with the most correct, or I would say which is 100% correct, that is A. D is generally correct, but not always. So my answer would be first statement, A statement is correct. Next question. Which of the following statement is or are correct with reference to know your customer? Know your customer guidelines were introduced in 2002. That is true. It was introduced by 2002. That is true. By SEBI? No. KYC guidelines are not introduced by SEBI. They are introduced by RBI. So first statement is incorrect. Second, there are two types of KYCs, namely you can go with Aadhaar based KYC and in-person verification KYC. That is true. Third is, it is the process by which banks obtain information about the identity and address of the customers. That is also true. So B option is correct, but first statement is incorrect because it was introduced by RBI, not by SEBI. Moving to the next question. Lines of credit and credit card are example of which of the following types of loan? So whenever we talk about different types of loan, we need to understand loans are categorized on the basis of parameters. First parameter is time period and return procedure. If loan time period is fixed and return procedure is lump sum, that means you will be paying the loan in one go along with principal and interest, then it is closed loan. Second is demand loan, when you repay your loan on the demand of the lender. Third is term loan, where you are repaying in predefined installments in the given timeline, that is term loan. Fourth one is open loan, where no fixed procedure is defined in terms of repayment as well as time period. You can repay whatever amount you want and you can repay whenever you want. So in case of credit card, there is a date, bill is generated, you have to pay the bill, that is true. But you can repay the loan or the credit which you have used through your credit card whenever you are willing to do that. And same is the case in line of credit. Today you have used the line of credit, you can repay the other day and the interest rate or the lending rate will not be charged the moment you repay the amount which you have used. So in that case, I can say it is what kind of loan, sir? It is an open-ended loan where repayment procedure is not defined, time period is not fixed. Is it clear? Moving on to the next question. Which one of the following financial institutions provides loan and grants to the government of poorer countries for the purpose of pursuing capital projects? So for the purpose of pursuing capital project, which one of the following financial institutes provide loan? Sir, is it BRICS? Okay. International Monetary Fund? No. United Nations? No. Asian Development Bank? Yes. World Bank? Yes. But the question is which of the following which provide loan to the poorer countries? BRICS is not providing loan to the poorer countries. First target is BRICS nation and then they will be expanding their operations. Asian Development Bank, that is true, and World Bank, that is also true. So which one of the following financial institutions provide loans and grants to the government of poorer countries for the purpose of pursuing capital project? So I'll go with the best bet out of all options is going to be World Bank. Recently there was a news that World Bank has announced one more type of funds that is known as FIF, Financial Intermediary Fund, in order to support Ukraine in the tough times when it is in war with Russia. So this is the latest announcement which has been done by the same organization, that is World Bank. Moving on to the next question. What are the factors that affect sovereign credit risk? So what factors they affect the sovereign credit risk? What is sovereign credit? Sovereign credit is basically when a rating is provided for a company that whether you should invest or not. Now in this case, what are the factors which affect the sovereign credit rating? I would say debt service ratio, that is true. What is the loan on the country and what amount they have to repay in terms of interest on regular basis. What is the external debt? That is true. Import ratio is very important because import to export ratio will help us to understand what is the dependency on the foreign currency. Personal income, sir, it has nothing to do with this. So answer is going to be 1, 2 and 3. A option is correct. Now let's check out all the factors which you need to remember. If I talk about the factors, we have debt service ratio, true. External debt, true. Import ratio, true. Along with that, economic development is a factor. Growth of domestic money supply, per capita income, GDP growth, rate of inflation and history of defaults. These are the other factors which are taken into account at the time of providing the sovereign ratings. Got it, guys? Last question of the evening is now on your screen. Consider the following statement. It was introduced in 2010. Okay. It is calculated on 4 parameters including return on net worth. What is calculated? Achha, you need to find out incorrect statement with respect to base rate. So base rate, BPLR benchmark prime lending rate 2003 to 2010. That is correct. Then base rate was introduced in 2010 to 2016. That is okay. Then MCLR was introduced 2016 to 2019 and MCLR was replaced by EBLR, and this replacement was done, to be very precise, 1st October 2019. This is the format. So 2010 base rate was introduced. This is correct. It is calculated on 4 parameters. No, sir. It is calculated on 3 parameters. Base rate depends on repo rate changed by RBI. Base rate should be dependent on repo rate. When RBI should change the repo rate, its impact should be visible on base rate, but that eventually was not happening, because of which base rate was replaced by MCLR, and even it was not reflected much in MCLR, then MCLR was replaced by EBLR. So the answer to this particular question would be incorrect statement. 2 and 3 are incorrect, so B statement or B option is the correct answer. Is it clear, everyone? So these are the important MCQs which are based on finance. I'm pretty sure these terms are clear to you. I will be catching you all in the upcoming sessions to go. From today onwards, we are starting up with the marathon sessions. Today, Prakash sir will be taking a marathon session on ESI. Tomorrow, Mahesh sir will be taking the marathon session on management, and I will be taking the marathon session on Thursday for finance, where we will be discussing more than 100 questions, 8 to 10, which will surely help you to cover and revise your entire finance, management and ESI before you go for the examination. Got it, guys? So that will be all. We'll catch you soon. Till then, stay tuned. And if you're joining us for the very first time, do subscribe our channel, and we will be coming up with a number of sessions and videos to help you guys so that you can score pretty well in your phase 2 examination. Thank you so much. We'll catch you soon. Bye bye. Take care.